So the stock market is taking it on the chin. Crypto is getting kicked in the nuts. And I am really appreciate owning hard assets, AKA cash flow rentals. So I thought we'd have a conversation with another real estate investor and talk about, you know what? Should people be buying hard assets that cash flow? Should they be doing perhaps in a falling rate environment? Casey, I don't know about you, but I slept great over the weekend, even though the stock market was tanking. Didn't bother me at all. Glad to have a 30-year fixed rate debt. What say you?
Yeah, I'm not looking to retire on my husband's 401k. It is what it is and it's there and it's great. But real estate, with 30-year fixed mortgages, with tenants paying rents and having 2-year contracts, and my average tenant, really doesn't leave. They're there 5, 6 years. I'm not sweating what's happening right now. I know a lot of people are sweating, but one thing that I am seeing is people, ooh, maybe now I should buy, because it has been, oh, we're going to wait till after the election. Oh, the economy is in flux. Oh, interest rates are going up and down. I'll wait till things settle down. That's always the thing. People want to invest when it's a for sure thing, when they can see the path, right? That's what people want to wait till after the election, not because of who's going to be president, but just to know the direction where the country's going, so they can like make plans accordingly. But we have had major news this week with the stock market, et cetera. And with talks of rate cuts, oh, maybe now people will start buying before the election. Um, I think, we were so excited last week with a buyer's market. Maybe that's going to end so fast. We're
The
into a
buyer's
seller's
market's over in 11 days.
market. It's over already. Thank God I got my good deal, right? But
There you go.
um, So I was hoping that maybe we could talk about the people that are finally thinking maybe I should buy. Maybe now's the time to buy. Do they have their buy box? Do they even know what they're buying? Have they been doing the work? Right? Do the work. Have they been doing the research? Or are they starting from scratch and they're not really prepared because they've thought they were just going to put off buying till later?
Yeah, this is such a great conversation because again, you have in my world, it's very simple and so structured. If you want to buy a great deal, it takes 3 to 6 months of work ahead of time, right? I believe going in and saying, I'm going to be a real estate investor in Memphis, look at the MLS, write 5 offers, get 2 counters, close one deal. That's gambling. You have no idea what you're doing until you've done the work and you've looked at the criteria every day for 90, 100, 120 days in a row. You have no idea what a good deal is or a bad deal. So yeah, if people just flip the script and are like, "Oh, I'm ready to buy," dude, you got minimum 3 months of work
Yep.
to do first.
Yeah. There's a lot of ways to lose money really fast in real
Oh
estate.
yeah,
So
yeah,
fast. And
absolutely.
the easiest way to lose money is not knowing what you're doing going into it. Because anyone can go buy a house. That doesn't mean it's going to rent out. That doesn't mean it's going to cash flow. Doesn't mean you bought a quality house. Could have tons of issues or surprise, an alligator property. You never know what you're getting into if you don't know, if you haven't done the work. So now is the time, if you have been putting this on the sidelines, to really get into the research phase. Now, I know, Michael, you do the 90, 120 days of research. I stick my students with the spreadsheet and it's intense analyzing. I'm not as nuts as 120 days, but it's kind of like we need to continually research. It's
Yeah.
not like it ever really ends. Even me, when I'm not buying, I don't buy deals every day, but when I'm not buying, I'm still keeping an eye on my market. So when I am ready to buy, I don't have to begrudgingly do that all over again. I just
Mhm.
know it innately. So people that are going into buying their first or second rental property, or having not bought one for a while, if you don't know your buy box in this current market, you might be setting yourself up to be buying a bad deal.
Oh, no question. No question. Again, you got to until you know what the average deal is in your buy box, you shouldn't write an offer. I mean, it's that simple. If
Yeah.
you're just picking something, you're going, "Oh, I like that one." That's not criteria. If you're going to be a real estate investor, it's about the numbers. It's about finding unique ways to create value. One of my favorite things as a new investor was I'm going to go buy 1,000 square foot, 2 bedroom, 1 bath homes. Why? Because there's a very good chance that that will suddenly become a third bedroom in there somewhere. And now I rent it. I buy it as a two, rent it as a three. You got to find ways to create value. And that's just one simple way.
Yeah. The property that we just bought last week, It has a front room. And we had really, and I bought it with one of my value add ideas of turning that front room into a fourth bedroom. And I still can do it, but this time we're not. We're going to redo the whole house and not do that. But what we did do is close off the wall into the kitchen so we can do the kitchen, because there was two entrances into the room and we didn't
Mm,
need one going into the kitchen. So I closed it off so that in the future we can turn it into a fourth bedroom. It's not going to give us the extra income right now because after looking at the market, us doing the kitchen really nice, since we're doing it anyways, is going to create that value add and give us the extra income that the extra fourth bedroom really won't give us without that other
mm,
bathroom, you know, 3, 1.5. So looking for value add opportunities is something that like I teach all the time. And it's like the cheapest way to increase your property's equity and increase your rent, adding another 100 or 200 bucks a month just for a $2,000, putting up a wall, some baseboards, and maybe an outlet and a door, is a no-brainer.
mm,
For me in Memphis, you know, I do get a lot of people that say, Casey, I want to buy in Memphis. How about these big suburbs? And I say no, because these big suburbs are two-story houses and they're 2,000 plus square feet. Imagine turning over in between tenants having to
mm.
repaint a 2,500 square foot home.
Yeah.
We're talking $7,000 if you want to have somebody paint that. Now, if you're,
Mhm.
you know, have tons of properties, you're going to get better painting deals and stuff like that. But, you know, you have to know your buy box, and you have to know that bigger is not always better when it comes to real estate. For me, I like 3 bedroom, 1 to 2 bathroom properties that are single story, brick, no basement, no siding on the outside. I've been there, done that with siding, and I will not buy another siding house as long as I live, because it's just a no for me. So I have this really unique criteria, and being in really good school districts is one thing that it's an easy way to knock things off your list. If you're looking to buy properties and you're not 100% sure of the area, especially like, my gosh, I have, you know, students, I know people that live in California that buy in the middle of the country. And
Mhm.
coming from California myself, when you look at the properties in the Midwest or the South, they all kind of look the same because
Mm,
there's trees everywhere. And you really can't tell the difference a lot of times from a good neighborhood from an okay neighborhood. It's hard to tell because from Californians, we're not used to seeing houses like that. It all just
mhm.
kind of looks the same. Even when I moved here, I didn't know where we were driving around because it all looked the same to me. So knowing the school areas is really going to help you narrow down and cut a lot of areas off your list. For me, I like to go, well, my criteria is, if you want an A neighborhood, you're looking at elementary schools with a 7 great schools rating and above. 7, 8, 9, 10, you can get an A neighborhood. 1 and 2 rating schools, to me, from my research, really is in line with a high crime D class neighborhood for elementary schools. I always look at elementary because it shows the neighborhood, right? Yeah, a high school could incorporate an entire city. So you got to
Yeah.
have rich people and poor people living in going to the same high school. So elementary schools, public, not private or charter schools, public schools will really help identify crime desirability with the neighborhood. So I kind of like to say four for a school and up. Three's okay, but 4 and up really is the best. The higher you can get with the school rating and the cheaper the neighborhood, with the higher the rent, the better the value, and the better the appreciation is going to be. I have found that my properties in the better school areas, I'm able to increase rents over time steadily, and my equity has gone up versus the neighborhoods that have maybe the 3 or 4 schools.
I love that. One of the questions I wanted to ask you, what do you think about, what do you teach folks about maybe getting an adjustable rate mortgage? I've got this question like 10 times in the last 48 hours. Basically, people believe rates are going lower. They want to play the gambling game of getting an adjustable rate mortgage. I have no idea. What do you think about adjustable rate mortgages? What do you think?
I think, you know, I don't buy a lot of primaries. I don't buy houses above the median. I don't buy expensive homes. So if you're looking to cash flow and you're buying a single family, from my research, people can prove me wrong. You're going to get something under $200,000 with a traditional 20, 25% down in today's rate. Obviously, you can cash flow with any price if you put 100% down. So we're talking traditional, regular 30-year fixed mortgage with a regular rate. Your property is going to really need to be kind of under 200,000. So why would I do an adjustable rate mortgage when I could just get today's fixed rate mortgage and go refinance later? Or today, buy down my rate. So when you have a property that's cheap, like under $200,000, with a traditional refinance being anywhere from $2,500 to $4,000, right? Depending upon the price of the house and the appraisal price and all that. Otherwise, things are the same price. Your appraisal is going to be virtually the same for $1 million home than a $300,000 home. Not much is going to be different for a refinance. Okay, so now I'm looking at refinancing a $175,000 house. Why don't I just buy the rate down now today? Because it's going to cost the same amount as refinancing. It's like an upfront refinance. But guess what I'm getting? I'm getting a guarantee. Getting a
Yeah.
guarantee that this is going to be my rate because we don't know. And we remember, Michael, last year, right? All last year, rates are going to go down by third quarter. Rates are going to go down by Christmas. They're going to go down and they're going to get into 5%. Did they? No. What they do? They went up into the sevens.
Yep.
So, and it
Yeah.
gives me chills because it's like, that's what they said. That's what they said. And it did not happen. So when you play the game like that, when you play in Las Vegas, right,
Mhm.
at the tables, you don't know what you're going to get. But guess what? I know what I'm going to get. I know that I'm going to get a 30-year fixed mortgage today, and I can buy my rate down if I want. Adjustable rate mortgages, I'm not really a fan either because I don't want to start off with a higher interest rate. I want to know what my payment's going to be today. And one thing that really irks me, which, it's fine, but I think it's a little misleading, is a lot of these new builders or even just the lenders are trying to get people to come in will say, or and realtors will offer as an incentive to buy their higher priced properties. You're gonna get your rate down to whatever, 5.5% for the first year, for the first 2 years, and then it's gonna go up. But you're gonna get your rate down. Your payment's gonna be way less the first year. So
Mhm.
thanks for that. Why don't you just get me a vacation or buy me a few dinners? Because I don't really care about getting a little bit of money off in year one. What about the rest of my life with the 30 years and I have to pay this exorbitant rate? So
Mhm.
just these little quick little buy downs, to me, that's not an incentive for me to want to do that. I want something for sure. I don't like those quick buy downs, and I'm not a real big fan of adjustable rates either. For that,
Yeah.
there's just not
Me
certain.
neither. Yeah. You just never know. Right. And again, I tell people all the time, it's got to cash flow day one with the current cost of capital or don't. What are you doing? You're just gambling. And, I've been in environments early in my career where a balloon payment came due and you had to refi. And it was tough. It was tough. So yeah, I'm definitely 30-year money, cash flow day one. If it doesn't cash flow, offer less, right? Offer less or put more down. And I generally like
And
offering less.
And if you have to do a loan program where you have a balloon payment, at some point, make it at least 10 years. A
Yes.
5-year term is
Too
too
soon.
short.
Too
Five
short.
years flies
Totally.
by. And the problem people are getting, and this is what we saw several years ago, people were doing these balloon payments and these shorter term loans, and the payments were coming due, is ending, right? And so what's the owner's choice? Well,
Mhm.
I guess I could sell my property or I could refinance. But if the property is not worth the money anymore because it hasn't been enough time to appreciate,
Right.
no one's going to refinance you.
You're
You're going to owe
stuck.
them money to refinance. So
Exactly.
at least 10 years, because 7 to 10 years, you can pretty much guarantee you're going to have some appreciation just because of time alone.
I
So
love
at
that. I
least
love
10
that.
years.
Yeah. Any other thoughts on this topic? Because I think a lot of folks will start looking at hard assets to produce cash flow. Anytime there's a big crash in stocks, crypto, more and more people come over to real estate. Any other thoughts?
Yeah, I would say um, don't get shiny object syndrome. Please do things that work. Realize that real estate isn't a get rich quick game. I talked to someone the other day who said, how many properties do I want to retire in 1 to 2 years of long-term rentals and I have $100,000. And I'm like, and how much do you need? 150,000 a year in cash flow. I'm like, bro,
Yes.
you know,
That math doesn't
okay,
work.
I'm sure it's happened to someone, and I'm sure that someone's selling a course on how they can do that because they did it, that one out of 1,000 people, they're just luck. But if you're going to transfer from stocks and you're going to come into real estate is a for sure thing, but it takes time.
Yes.
So the best way to ensure your success is to buy properties in appreciating markets that also cash flow. What does
Yep.
this mean? This means you're unfortunately not going to be buying the $60,000 properties in CD neighborhoods
Hmm.
because those don't appreciate.
Yep.
You're going to have to buy properties that need value add. You're going to need to buy properties that are close to that $200,000 range. You're going to have to do some renovation. and then you can rent it out. And a lot of times you're not able to take your money out. You're not able to burr. You're not able to cash out refi right away, because if you do, your mortgage payment is higher than your rent payment. But what I have found that by doing this strategy, buying in quality neighborhoods, putting in the rehab money and renting it out, it takes just a couple years, but your rents rise significantly. I don't usually raise rents too much on my tenants, but when they move out after a few years, I will raise it to market rent,
Of
you
course.
know? And I have like I the house that we bought last week, I'm anticipating us cash flowing off the bat $600 to $800 a month. And that's gross cash flow after just fixed expenses. I manage myself, right? I'm not gonna right now, I'm not taking out for pennies on things. It's gonna all be brand new. But being in this good area in this quality city, this part of the town that I'm really excited about, it's going to go up and up and up in value. And I'm so blessed. Hashtag blessed. That's why I say hashtag blessed. That everyone says that all the time. Blessed on there. They always put hashtag blessed, and I'm just like, oh my God. So now instead of saying blessed, I say hashtag blessed. I know. But anyways, being in this area, it's not going to cash flow after a few years if I were to get in later. So
Mm,
it's kind of like getting into these neighborhoods that you can cash flow now, but in a few years, they're not cash flowable. And you're going to be like, I have houses in these neighborhoods. They cash flow, and be like, whoa, you have cash flow here? Like, that's not possible. This is the
yep.
people that 10 years from now or 5 years from now go, how'd you get rental properties? There's no way. You're a scammer. It's because why? Because I got in now. So
Yeah.
you that are watching, coming from the stock market or looking to get into real estate, get into one of these B neighborhoods, starter family neighborhoods that have great schools and are highly desirable. You're not going to cash flow buying a rent ready there, but
Yeah.
you will cash flow if you fix up the property, and your rents are going to go up. Your net worth is going to go up from the appreciation in that property. And then in a few years, sure, do your cash out refinance that you want to do or whatever. But to me, that's the key to success and having stability in real estate, is buying in neighborhoods that are going up in value and cash
Yeah.
flowing.
This is just one of the things that I think a lot about, because again, stock crash, crypto crash, people are like, what can I do? And I like real estate because it's actually hard to sell. Right. One of the things, obviously you pull up Robinhood or E-Trade or any of these things, you could sell a stock or crypto. Shoot, crypto trades 24/7. You could sell it anytime. Real estate, really, you can't get that emotional. Even if you get pissed off, you're 30 or 45 days most times from selling something. So it's definitely not an emotional play. It's a plan. It's a get rich for sure, not get rich quick. I love all of that. But I do like the fact that real estate's hard to sell.
Yeah. It's an interesting fact. I hadn't really thought about it. But the one thing you want to make sure is that it's not hard to sell for you when you want to sell, right? So
Yes.
how can you ensure that? Don't over leverage yourself,
Yeah.
and make
Don't
sure
become
that
a
you can,
motivated seller. Don't
yeah,
do that.
and make sure that you give yourself a long enough term mortgages. Don't get excited about adjustable rates that might screw with your cash flow, and make sure that you have a rate that cash flows today. Because I've talked to a lot of people too, probably not a lot, but a few people who have said that they bought negative cash flowing properties because they're banking on rates going down. And I'm like,
Mm,
well, they said that last year, and I kind of think it's going to happen. And I do, because of the election. They want to get reelected. So that's what people do. They'll do whatever. But last year they were supposed to do it too. It didn't happen. So all those people that last year that bought in the beginning of last year, who said, oh, rates are going to go down by June, whatever, down to December, it never happened. They were at 8%. They've gone down a tad, but they're probably still negative cash flowing. They're not able to refinance enough to be worth it to pay
yeah,
for the refinance.
it's crazy.
So get a deal that makes sense to you today.
Yep.
Make sure that it's in a good neighborhood. And, if you are coming from the stock market, really learn your buy box. Go pick your area, right? Hopefully it's near you. And if it's not near you, you really got to find a local expert where you're going to buy that can help you with boots on the ground. And you're going to need to spend hours at night doing research to really understand your market. And here's my one example that I tell people. I say, if you can say something like this, I'm about to say, then you know your market. For example, I buy in 1, 2, 3, 4, 5 zip code, 3 bedrooms, 1.5 bathrooms. And I know that I have to buy under $165,000 if I need to put $20,000 into it. And if I do, I'll be able to rent it at $1,500, and I'll be able to make $400 a month net cash flow. If you can say that sentence, then you know your market.
Yep.
And if you're like, I'm going to buy anywhere that cash flows, you need to do a lot more research. and you're just you can lose in real estate. And if you can't say something like that, you're
Yeah.
not ready to buy.
Yeah, I know plenty of people who got enamored with the Midwest and went broke buying cheap. Yeah. Excel math lies.
The thing with the Midwest, Michael, is that all the houses are early 1900s. So a lot of my students buy in the Midwest, but and they know the risk, right? The risk is you've got old pipes, you've got siding, you have old windows, you have foundation problems because properties were not built like they are today, and there's just a lot of structural work that a lot of these homeowners and investors are having to do to get these properties up to par. Be careful buying flips because the flippers that are out there, they make it look pretty, but they don't touch the structural.
Mm-hmm.
And so if you don't do a home inspection report and you don't know anything about houses,
Be careful.
that's where all your money goes down the drain.
There you go. Casey, you do an amazing job. Where can people find you?
People can find me every day on YouTube, Brick by Brick Wealth, and Instagram, Brick by Brick Wealth, and my website too. .com.
Awesome. Thank you so much.